Hey guys, in this video I'm going to be talking about whether you should be investing in Tasmania. Okay, so many of you might be considering Tasmania to be your first or next property investment location. This video will tell you exactly the reasons and why those recommendations have been given. So we'll get to the recommendation, but my name's PK and I help people build passive income by buying properties that have a combination of positive cash flow and high growth without using a $15,000 buyer's agent, without spending months on realestate.com, and without spending your weekends at inspections or flying around the country. Alright, so if you're brand new to this channel, hopefully this video gives you lots of value. If you have been on this channel and if you do get value from this video, smash the subscribe button right below, turn on that notification bell, give it a thumbs up. That way YouTube will bring this video to many more people. And if you're watching on my Facebook group, there's more than 7,000 of you. Thank you so much for being with me. Hit it, like, tag people who need this, and hopefully, it reaches people who actually can benefit. All right, so let's get into it. So Tasmania has been a star performer, right? So generally, I don't like to talk about states or territories, because in any state or territory or even city, there's high performers and there's low performers. Sometimes people think, oh, I should invest in this city, or I should invest in this Perth. A lot of people will say, I should invest in Perth because it hasn't grown as much as Sydney. Or some people will say, I shouldn't invest in Perth because it has not grown, right? The reality is that regardless of where you're looking, a state or city, there are always areas that jump up in value and there are always areas that plateau or fall in value. Just like if you're investing in the ASX 300, the stock market, regardless of whether the stock market is increasing or falling, there's always stocks that are going counter-cyclical. So similarly, what we are interested in as property investors is not whole states, not whole cities, but rather individual suburbs. It's the suburb, which is the equivalent of a stock. So how does this relate to Tasmania? Tasmania has been an area that has done incredibly well. I'll give you an example. After about 2015, when basically the herds were buying in Melbourne and Sydney because it had already gone up in 2013, it had already gone up in 2014, it had already gone up 2015. So now the media had caught on, friends were telling each other, I've made so much money, you should invest in this, Melbourne, Sydney, everything is booming. The more advanced, the more sophisticated investors were buying in locations like Hobart, we're buying in locations like Burnie, we're buying in locations like Devonport, we're buying in locations like Launceston, etc., etc. And why? The reason is that in Sydney, in Melbourne, you'd already by that time, 2015, seen a 30, 40, 50% price rise on average. Whereas in these Tasmanian suburbs, you hadn't seen any of that. It was right at the bottom of the market. But the clincher is, in Tassie, all of these areas, basically all of these areas, even downtown Hobart, were positive cash flow. That means that yields were above 5%, were above 6%, sometimes above 7%. So whereas if you bought in Sydney in 2015, you might have made another 20, 25% capital growth, then that would have corrected itself in 2017, 18, 19, down 5 or 10%. In Hobart, if you invested in 2014, 50, right now, you would have almost doubled your money, all right? And you didn't need $1 million to start with. So Hobart's been great, but you're asking me, okay, what does that mean for me now? Okay, I didn't invest 5 years ago. I'm watching your video so you can tell me whether I should invest now. Look, infrastructure is aplenty in Tasmania. So for those of you who know me well, you know that I always say infrastructure is great, but infrastructure is not the sole reason why you would invest in a suburb, why you would invest in a city. But having said that, let's just quickly go through some massive infrastructure projects that are happening all over Hobart, which tell us that the price increase that we've seen, and it's not going to go on forever, but it's not going to end anytime soon. And these infrastructure projects are like, when you build a fire and you've got the tinder and you've got the fire logs. These infrastructure projects are like when the flames have consumed all that tinder, all those fire logs, you're putting in more tinder, another 1 or 2 fire logs underneath that fire so it catches alight again. That's what these infrastructure projects are doing. The data itself is starting to mellow out for parts of Tasmania, but these infrastructure projects, simply because of the velocity and quantum of them, there's so many, that's kind of like refueling that flame. And that's why to this day, Hobart has outperformed any other capital city in 2017, 2018, I think 2019, 2020, right? It's been a star performer. Not only has it gone up 80, 90% in many instances, but actually rents have gone up as well. So think about that. If you bought in 2015 in a place like Hobart or Launceston, what you'll find is not only have you almost doubled your money, but your rents have almost doubled as well, or at least gone up 50 to 80%. That just means that instead of just making $5,000 positive cash flow, now you're making 10,000 or close to 10,000. That is what you guys want. That is what we all want. Positive cash flow, passive income with capital growth. So at the end of this video, I'm going to actually tell you one area in Tassie, that still has a lot of legs left in it, probably the most legs left in it. So watch till the end of this video and we'll get to there. But let's just go through the infrastructure projects real quickly. So you've got I'm just reading off my computer here. You've got the Royal Hobart Hospital, that's $700 million, almost completed. You've got the Derwent Entertainment Centre, that's a $300 million project. 1,200 jobs in Hobart. Bridgewater Bridge, that's a $600 million bridge. Once again, it's going to improve connectivity. I'm going to go through these real quick. Hobart Airport is another expansion there. Of course, no flights at the moment, but when they do start kicking in, that'll help. Macquarie Point, that's $1 billion world-class entertainment precinct. That's just going to further add to Hobart's tourism vibe. There's the Sten Hub, which is $400 million education facility. The Hedberg, $110 million state-of-the-art complex for the University of Hobart. I'm just going to, just don't stop watching this, right? I'm really making the point that there's so many projects, and that's really why I'm just listing them all off for you. There's Hobart Port, $60 million, Kangaroo Bay Hotel, $80 million, blah, 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 blah. Let's go to Launceston. So Launceston University, there's a construction of a new education facility, $300 million, capacity for 15,000 students. Tama Valley, new road project, $80 million. Launceston Hospital, $100 million. It's going to happen at the end of this year. There's a few other hotels. If we go to places like Burnie, I'll tell you, so many of us invested in Burnie, which is in northwest Tasmania. Really small place, less than $100,000 population. 5 years ago or 4 years ago, you could buy a property there, really nice, 3-4 better, perfect property for about $230,000. I personally did this. Probably about 20 or 30 clients did this as well. $230,000 purchase, yielding about 5.5-6% at the time. Now that same property is approaching $400,000. So it's not been 10 years, it's been about 4 or 5 years. It's almost doubled in value. Rents have almost gone up, I think about 50-60%. This is advanced property investing. You don't just need to stick with capital cities. I'm trying to demonstrate by listing these projects out for you that these regional areas aren't any less risky if all these fundamentals stack up, if there's so much infrastructure going in. Infrastructure is not the only reason why we invest in a suburb or in a location, but like I said, it provides those extra fire logs or firewood so that flame keeps burning. So Burnie University is a $90 million upgrade, Port of Burnie. Now this is really the reason, it's a $300 million ship investment. This is really the reason that Burnie's forestry industry has bloomed. Actually, the population of Burnie has gone down but the type of people that live there has changed, lower skilled to higher skilled. So anyone that tells you population growth in of itself drives capital growth doesn't know what they're saying, because Burnie has almost doubled in value, not quite, but the population has actually gone backwards. So go figure. There's the Hermel Group, hardwood, $200 million timber mill built, Cradle Mountain, there's 160 million master plan for visitor facilities, like the manufacturing plant, battery plant, wind fire plant, gold mine, like blah, 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 right? Like there's so many infrastructure projects going in. You won't find that in Brisbane. You won't find that even in Melbourne. You won't find that in Perth. You won't find the level of infrastructure spend per capita anywhere in Australia that even comes close to Tasmania. So the point of this video was to tell you guys whether you should invest in Tasmania. Now, the reality is that it has grown so much. Like I said, many parts have doubled, most parts have gone up more than 50%. A lot of agents out there, you want to listen to this if you're considering using a buyer's agent. A lot of buyer's agents out there are investing in a suburb called Devonport, or a location called Devonport. The reason being, first-time investors don't have that much capital. They've only got, let's say, a $50,000 deposit. They can only buy a $300,000, $350,000 property, which is fine, by the way, nothing wrong with that. So a lot of buyer's agents are getting those types of folks into Devonport, which is a location that is between $300,000 and $350,000. Actually, there's nothing wrong with investing in Devonport. All the data looks pretty solid, as I've just demonstrated without waffling on. There's like more than 40 infrastructure projects that are really holding up not just Devonport, but all of Tasmania. But why are these buyer's agents investing your hard-earned money in a location like Devonport, even though the data stacks up, has already grown by more than 30%? Think about that. Devonport, just a year ago, or around a year or so, a year and a half ago, was worth, average place was around $200,000 to $250,000, average three-bedder freestanding house. Now that same house has increased to mid-300s. What that tells us is that there's been a growth of well over 30%. So before you engage a buyer's agent or even me, ask yourself, do I want to invest in a location that has already risen by 30, 40, 50%, a bit like buying in Sydney, Melbourne in 2015-16? Or do I want to buy in a location with the similar data, where all the drivers are perfect, infrastructure and all the other data factors that I talk about in other videos, but it's right at the bottom of the market? Now, the way to make money in any investment class is not to buy at the top, but to buy at the bottom. So before giving away your hard-earned money, ask yourself, am I investing in a suburb, in a location that is at the bottom, or is it at the top? Regardless of how much firewood there is in there. Now, Devonport, which is really a favorite of buyers agents recently because it's shown momentum, was where we were buying about a year ago, and a lot of buyers agents are buying there now. But it's already grown too much, so you need to be very careful of just outsourcing that responsibility and accountability, right? You want to be there a year ago, right at the bottom of the market. It's timing the market that really allows you to accelerate your wealth. Time in the market is great. We want to hold our assets for the long term, but timing the market plus time in the market is where true wealth is made. Now, more than 90% of millionaires in the world acquired their first $1 million through real estate investing, right? Whether that was development or buy and hold. Now, you don't make $1 million in real estate very quickly at all if all you're concentrating on is time in the market. It might take you 10 years. Like, let's say you invested in somewhere that's already boomed. Let's say the Ponds or Schofields in Sydney. A lot of you guys will know what I'm talking about. Like the type of people that buy in Schofields, let's say a bit like me, of Indian origin, I'm not an IT professional, but let's say an IT professional, husband, wife, couple of young kids. Those guys have a household income of 150 to 200,000, maybe $250,000. They've just pushed up Schofield prices or Box Hill prices in Sydney, by about $400,000-$500,000 in the last 6 months. That place isn't going to become a $2 million suburb in the next 5 years. Like the affordability simply isn't there. So similarly, if you want to make $1 million in real estate really quickly, it's not just about time in the market, because if you buy in Box Hill or Schofields, you're going to be waiting 10, 15 years for that doubling of value to happen now. But you want to be timing the market, and that's why it's important to look outside where you live. Okay, so back to Tassie. The one area I promised you at the end of the video, I'll tell you if there was an area where I'd be investing, it's a suburb called Romaine. Now, Romaine is one of these areas that hasn't grown as much as the other parts of, let's say, Launceston, Devonport, Hobart. Like, let's say a suburb like Glenorchy in Hobart, central Hobart. We were investing there about 4 years ago. That thing has doubled and it's still booming along. Don't pick an area like that. Pick an area like Romaine. Now, this is not personal advice, but Romaine has only grown by about 20-25%. You really should have bought there a year ago or 2 years ago, but the data is pretty phenomenal. I can tell you right now, it'll continue to go from leaps and bounds. So if you're thinking, PK, I'm not going to take your advice, I'm not going to buy at the bottom of the market, I just want some free advice, I just want to make money quick, buy in Romaine. Not personal advice, but the data says it will do well, and it's not my opinion. The data is always correct, as long as you know how to interpret it, and as long as you get reliable data, which is what I teach in the Property Investment Accelerator. But there you go, there's a free suburb. No one else is giving you these suburbs, so I might as well. And I hope this allows you to really build trust in the data, because the insights and feedback and inferences that I share, they're not my opinion, they're actually based on data. And you can watch this video a year from now, so it's May 2021. Watch it a year from now and see what Romaine has done in the next year. I know it will do well. So hopefully that gives you some context in Tasmania. Key takeaways from this video, right? It's already done well. Tasmania has already boomed, but that boom is not going to finish anytime soon because of all those infrastructure projects that I mentioned. The data is still pretty good, but we want to buy at the bottom of the market. Therefore, that rules out large parts of Tassie. You want to be very selective. Don't just, go by the whims of a buyer's agent and their sometimes amateur attitudes in where they get their clients into. Just because somewhere has already boomed, it will continue to do well, like Devonport. You want to buy at the bottom of the market, because timing the market is where real wealth is made. And if you want to buy in Tasmania, Romaine or that Romaine-Burnie area is really where the meat or the predominant future capital growth will come. Are there better areas in Australia to invest? Yes. If you want me to produce more videos to tell you where they are, leave a yes in the comments below. So just type a yes in the comments below, whether on YouTube or Facebook, and that will give me feedback to produce more of these types of videos. So hopefully that was valuable, guys. Smash the subscribe button, hit the notification bell, give it a thumbs up. That way this video reaches more people. Same thing on Facebook. I'll leave a link below on how you can join my Facebook group. There's more than 7,000 people there. You'll see client results, deals, more content, real useful content, not the stuff in podcasts. And finally, I'll leave a link below on how you can actually do this yourself. You don't need me. You can learn all this stuff yourself. The link to the Property Investment Accelerator free case study is below. Check it out. My name's PK. Take it easy, guys, and happy investing. Bye.